Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bavulski. Yesterday, the US dollar strengthened against the euro as traders continued pricing in the possibility of additional Federal Reserve rate hikes later this year. In the first half of today's session, the euro may recover some of those losses, as Germany released the IFO Business Climate Index, the Current Assessment Index, and the Economic Expectations Index. Stronger than expected readings could ease pressure on the euro and support a short-term rebound. Traders should also pay close attention to comments from Bundesbank President Joachim Nagel. His stance on the interest rates could become a key driver for EURUSD, and a more hawkish tone from the Fed relative to the ECB may ultimately weigh on this single currency. If the pair moves lower, the key level to watch is support at 1.1347. A false breakout there provide a potential long entry targeting a recovery toward resistance at 1.1384. A breakout above that level followed by a successful retest would confirm bullish momentum and open the door for a stronger move toward 1416. Where sellers are expected to become more active. The final upside target stands at 1449, where profit taking is likely. A sustained move above that area would seriously challenge the current bearish outlook. However, if EURUSD declines and buyers fail to defend 1347, which currently appears to be the more probable scenario, bearish pressure on the euro is likely to intensify, increasing the risks of another major leg lower. In that case, sellers will likely target the next key support level at 1.1314. Only a false breakdown there would justify fresh long positions. Otherwise, aggressive rebound buys can be considered from 1.1270, targeting a 30-35 pip intraday recovery. Sellers remain firmly in control as market continued to price in a more aggressive Federal Reserve stance and the prospect of higher US interest rates. If EURUSD attempts a modest recovery during the first half of the session, the key level to watch will be resistance at 1.1384. A false breakout there would provide an attractive short entry opportunity, targeting a decline back towards support at 1.1347 and reinforcing the ongoing bearish trend. A decisive break and close below 1347, followed by a successful retest from underneath, would confirm renewed downside momentum and likely trigger a broader sell-off. That scenario would expose the next major target at 1.1314, where stronger buyer interest is expected to emerge. The final downside target stands at 1.1270, where profit taken on short positions is likely. On the other hand, if EURUSD pushes higher and bears fail to defend 1384, an area reinforced by moving averages that continue to favor sellers, the euro could stage a modest corrective recovery. In that case, it makes sense to postpone fresh shorts until the next major resistance at 1.1416. I would consider selling there after a failed breakout and clear rejection from that level. As for aggressive fade trades, short positions on a direct rebound from 1449 remain in play, targeting a 30-35 pip intraday pullback. Let's trade with the MACD indicator. It's time for GBPUSD, Jakub Novak presents. You could plan to buy the pound today upon reaching the entry point area around 32.08, with the target of 32.41. At around 32.41, you could extend to exit long positions and open shorts in the opposite direction, expecting a movement of 30-35 pips in the opposite direction from the level. We can only anticipate an increase in the pound today based on strong reports from the UK. Before buying, make sure that the MACD indicator is above the zero mark and just starting to rise from this area. You could also plan to buy the pound today in case of 2 consecutive price tests of 1.3184, while the MACD indicator is in an oversold area. This will limit the pair's downward potential and lead to an upward market reversal. We can expect growth to opposite levels of 1.3208 and 32.41. You could plan to sell the pound today after the level at 1.3184 is updated, which will lead to a quick drop in the pair. The key goal for sellers will be the level of 1.3157, where you could plan to exit shorts and also immediately open longs. Expect a movement of 20-25 pips in the opposite direction. Bad news will strengthen the pressure on the pound. Before selling, make sure that the MACD indicator is below the zero mark and just starting its decline from there. You could also plan to sell the pound today in case of 2 consecutive price tests of 1.3208, while the MACD indicator is in an overbought area. This will limit the pair's upward potential and lead to a downward market reversal. We can expect a decline to opposite levels of 1.3184 and 31.57. That's all for today. See you online soon.